Hello everyone, happy Sunday. So there's not much to talk about in today's video, so we're going to address exactly what needs to be addressed, and in turn this video should be nice, short, and sweet. All right, so without further ado, let's get started with the video. Okay, number one, we have Nvidia earnings Tuesday after hours. So Nvidia, as we know, prior to large tech stocks earnings, there is an earnings run up. Okay, so this could cause Monday heading into Tuesday close to be bullish. What happens afterward is up in the air. So this is a really big important earnings. This is going to affect AMD and the other chip stocks and also the NASDAQ as a whole. All right, we're also seeing more retailers report earnings Tuesday pre-market. So if these companies do well, that should be positive for the Russell 2000 as well, which in turn would be positive for the S&P. All right, so let's go ahead and start off by looking at the dollar. All right, so the dollar we know has an inverse relationship to the market. If the dollar is bullish, then generally it is bearish for the overall market, has an inverse relationship. So we can see that the dollar closed outside of the lower level of the Bollinger Band. There's still more room to fall to the downside. And if the dollar does continue to fall, that will technically be bullish for the market. And I am of the opinion of being bearish on the market. But according to the dollar, we are overextended to the downside. We could continue to fall lower Monday, by all means, okay, which would be bullish for the market. So the dollar still showing some room to the downside, but it is overextended now. It's trading at an extreme in terms of the Bollinger Band, okay? So that's number one. Let's go ahead and take a look at the VIX. So the VIX is also inverse to the market. If the VIX is falling, then that is bullish for the market, okay? And the VIX trading below $14 is bullish. So we need to see the VIX pop upwards and close above $14. What we're seeing right now is the VIX hugging this trend line. So we could end up seeing another move to the downside on the VIX, similar to another move on the downside on the dollar. But overall, if we do come back and test this trend line and get like a really big drop, that would give enough chance for a sharp upward move, in my opinion, on the VIX. But just looking at things of horizontally, essentially 14 is a very major psychological level on the VIX, so keep that in mind. But we're hugging the trend line. This isn't extremely bearish on the VIX. You could see that it's coiling up, and the more price action essentially coils and we're not really making new lows completely, this is actually bullish for the VIX. So if it's bullish for the VIX, then it should be bearish for the market, okay? So immediately heading into Monday, it's up in the air. But in general, I do think that the VIX is a bit bullish here. And of course, we also have to take a look at the yields. So we know that the yields are also have an inverse relationship to the market. So if the yields are bullish, then the market is going to be bearish. So we came and tested this trend line, but we painted a pretty ugly little indecision candle here. So this, as we know, this is a falling wedge pattern on the yields, the 10-year yields. So falling wedges are extremely bullish patterns. We're also trading at the lower end of this channel as support as well. So we're at some pretty important support here on the yields. Essentially now, all eyes are back on the yields. We need to see if we could close back above 4.5, and then we could start to break out, right? But in general, things can be choppy for these next few days. But in general, we came back, tested the support. Technically, it is bullish that we came and held, but now we need to see some follow through to the upside. And if we see follow through to the upside from here, then this is bearish for the market. In general, we could end up making another low, catching people off guard. But then, in my opinion, off of this, it would be a nice little opportunity for a bounce once people. But so overall, all of these are good, like opportunities to be bullish on the yields, which is in general bearish for the market. Okay, so now I'm gonna tie it all together, and I'm going to show you guys what I think is going to end up happening on the market. All right, so let's start off by looking at the IWM. So we know that the IWM and the NASDAQ have, so IWM has been like really strong recently. There's been a sector rotation. Money has been flowing into the IWM related stocks. So this in general is a really bearish setup. This is not really a good setup. I do believe that eventually we should fall lower. We could see though, however, that this is a falling wedge. We broke out of the falling wedge and we're now creating a bull flag. Okay, so technically we're consolidating at a level of resistance with a bullish pattern out of a bullish pattern that already happened. So they are trying to paint a very bullish picture here. But in general, I do not believe that you should be going long. This is, you know, all of this in between 178.50 to these highs here are all good shorting opportunities. So if we do end up, you know, popping a percent and a half, these are still, you know, it's tough to, so look, this week is historically supposed to be bullish. Okay. But it is very difficult to be bullish, to add longs here. And that is the main concern, because this is a bearish pattern and these are good shorting opportunities for that reason. We could see that there is, you know, we're gonna have to key off of the VIX, the dollar, and the yields as well. But in general, the IWM does not look like great. Okay, I would want to see a bit of a pullback. And then when you look at the NASDAQ on a 1 hour time frame as well, this looks even worse. So you could see that this is creating a bear flag. And essentially what I like to do is I like to make a fib level from the highs to the lows. And you can see that we have not closed above the 50% fib. So that is generally not bullish. And now we're trading below the 38.2. So this is a really ugly setup. You guys know that when I look at this setup, even on a smaller time frame, I am generally bearish this entire way up as well. And then especially if we end up making another high, then I would be like, on a 1 minute time frame, scalping wise, I would be aggressively short up here. So this is really not a bullish setup in my opinion. We did, unfortunately, the one thing that is pretty bullish is we ran the lows here and we ended up ripping up higher. So then we came back and retested that same area and then we ripped up higher. So that is the only thing here. The NASDAQ is showing bullishness based off of this stop hunt. But regardless, up here is not where people are going to be adding to longs. I would rather see a bit of a pullback heading into Monday. And then Tuesday, Wednesday, and Friday, we should have a bullish week. So the main thing that I am looking at, so day to day right now, especially during the holiday season, especially going on right now, what they're trying to paint for the market, it's very difficult day to day for me to think about what happens. So but in general, so now here's what essentially what we're gonna have to take a look at. So if we have an overall bullish week, so number one, we close above 450. Bears don't want this above 450. Obviously, bears would want this below 445. And I've been saying how the 448 level was a very key level of resistance and support for this week. And we could see that the low was right at 448.12. And we bounced off that level and now, like, you know, we're above 450 again. So in general, it's not really showing that much. It's showing upside potential, but this is not really a good time to start adding to longs. But what I do want to look at is this Friday, the Friday that just passed, into next Friday, right, the Friday after Thanksgiving. If we end up being green, then there is a 100% likelihood in history that from this December to next December, we end up being bullish for the year. So Thanksgiving week is a really, really good indication for how well the market is going to perform over the next year. So once again, if Thanksgiving week from Friday, November 17th to Friday, November 23rd, November 24th, the close, right? If we are green, then there is a 100% likelihood that we will be green from December 2023 to December 2024, the end of those months. Okay, so historically speaking, that's what ends up happening. So yeah, that is the other thing that we could take a look at. Sorry, this is the data here. If Thanksgiving week is up at least 2%, then the year to year is bullish, but it needs to be up at least 2%. So keep that in mind. Let's see if the market is going to be up at least 2% during the week. If that is the case, then 100% of the time, December to December, we end up being green. So, you know, there's not really much else to look at day to day aside from Nvidia earnings. The market should be giving a bit of a pullback. If that doesn't end up happening, then, you know, there is a better likelihood that we'll get a short if we end up just continuing to make highs, because that is not a sustainable way the market is going to push. And that is my thought process. There's not really much else to look at in the nitty-gritty day-to-day things. So, you know, I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys tomorrow.